The situation regarding Medial Properties Trust, which has been one of the most controversial REITs out there for a while, has recently taken a greater downturn. On January 5th, shares of MPW fell by as much as 30% during the trading day, which is unlike anything dividend or income investors typically see. Despite only being about 3 weeks into the year so far, the share price of MPW has already collapsed by 40%. And so a number of people have been asking what I think our opinion should be, because I am a shareholder of MPW and I talk about this company every now and then. So given the recent developments, is it finally time to give up and sell out of MPW, or should investors take advantage of that 19.5% dividend yield? In this video, I'll break down the recent developments and give my opinions on the issue. Medial Properties Trust is a healthcare REIT that's been around since 2005. With the exception of the 2008 financial crisis, MPW's stock for the longest time delivered really good returns to investors, consistently growing their quarterly dividend while also seeing a pretty decent amount of growth in their share price. The issues surrounding their stock began in early 2022 with reports that their largest property tenant, Steward Healthcare System, was in serious financial distress after the COVID pandemic. As of the making of this video, Steward Health makes up about 25% of this REIT's property portfolio. This resulted in them being unable to pay Medial Properties Trust large sums of money they had owed in back rent payments. As time went on and Steward Health wasn't able to pay their past due rent, Medial Properties Trust started having their own financial difficulties in sustaining their quarterly dividend. Between January 2022 and July 2023, the share price of MPW fell by over 60% as pressure continued to mount on the REIT. Then finally, of August of last year, MPW issued a press release saying that they'd be slashing their dividend from 29 cents to 15 cents. This would give them a more conservative payout ratio between 70 and 80%, which is typically what equity REITs like to aim for. The company's CEO would also make a video announcement on their website in an attempt to calm investors regarding their situation.
Hello, I'm Ed Aldag, CEO of Medial Properties Trust. I'd like to express my deepest appreciation to all the shareholders who continue to place their trust in our company, even as our share price has come under pressure from others who stand to benefit financially from such a decline. I would be remiss not to acknowledge the real toll this has taken on people who have invested their hard-earned savings with us. As a large shareholder myself, with significant interest tied to the success of this company, please know that I hear and feel every one of you. For 20 years, our strategy has been focused on making profitable investments in hospital real estate. Through this time-tested and transparent strategy, MPT has grown into the second largest owner of hospital real estate in the world. Our total asset value stands at $19.2 billion, having grown 118% since the end of 2018. As we approach 2024, we remain confident in the value and strength of this portfolio. MPT owns real estate, and our cash flows predominantly come from long-term lease agreements with our tenants. They are inflation protected. So in 2024, for instance, we expect $50 million in incremental cash rent and interest from our current portfolio based on prevailing rates of inflation. Because MPT invests in hospital real estate for the long term, 15, 30 plus years, we are also committed to ensuring the long-term viability of our hospitals for the communities they serve. There are times when high-quality hospital operators experience short-term financial challenges caused by unexpected events. The COVID-19 pandemic, the recent nursing shortages which exacerbated labor costs are excellent examples. In these rare situations, MPT will sometimes step in to provide temporary, limited support through working capital loans. These loans, which comprise only a very small percentage of our assets, carry market cash interest rates, are backed by strong collateral, include significant protections, and are certainly preferable to permanently cutting rent. So this is where we are today. At the same time, our business cash flow profile, while still robust, has meaningfully changed over the past 18 months as a result of certain strategic asset sales and the extended timeline by which the full prospect restructuring is expected to take shape. Hundreds of millions in cash proceeds from the sale of our Australia and Prime portfolios have already been deployed towards near-term debt paydown. We have also made the decision to adjust the size of our dividend to better align with our cash flow profile following the recent and pending asset divestitures. In total, relative to our previous dividend level, this is projected to save approximately $2.5 billion over the span of our debt maturities. We are actively working on other transactions that would decrease leverage even more quickly. We appreciate your continued support. Thank you.
Fast forward to a couple weeks ago, and Medical Properties issued a press release stating their intention to accelerate their efforts to recover uncollected rents and outstanding loan obligations from Steward Health. According to the press release, as disclosed in the company's third quarter 2023 Form 10-Q, Steward delayed paying a portion of its September and October rent to MPT. Despite obtaining additional working capital financing and selling its non-core laboratory business in the fourth quarter of 2023, Steward recently informed MPT that its liquidity has been negatively impacted by significant changes to vendors' payment terms. As a result, Steward has continued to make partial monthly rent payments, and total unpaid rent under its consolidated master lease with MPT is approximately $50 million as of December 31st of 2023. This news caused panic among shareholders, and shares of MPW fell by as much as 30% on this day. Today, the share price of MPW is currently at $3.07 per share, which is 87% lower than its all-time high roughly 2 years ago. What's made things worse for their stock is that it's one of the most shorted in the entire stock market by both individual investors and large institutions. This is when people bet against a company, and much like how buyers drive up the price of a stock, shorts can bring a stock share price down. These short sellers have been magnifying the losses experienced by MPW, and they aren't showing any signs of slowing down. While Medical Properties dividend at its current rate is still fully covered, many investors in the last few months have felt defeated and are dumping shares of this company. As a current shareholder of MPW, I myself have been feeling the burn of this stock's plummeting share price. It's now become my worst investment in terms of percentage lost on my original investment, but not in terms of total amount lost. As of the making of this video, MPW currently makes up just 0.46% of my overall portfolio. But despite it being such a small part of my portfolio, no amount of loss is ever fun. This holding is also the one I continue to get more criticism of than anything I've talked about on this channel in a long time. Even though I didn't buy into MPW anywhere close to its all-time high, rather after the stock had already plunged by more than 53%, some people appear to be under the impression that I've held it for a long time even before 2022. I've always treated Medical Properties Trust as a higher risk holding, which explains why it makes up such a small percentage of my overall portfolio. So just how much am I currently down on MPW? According to my cost basis, I'm currently down $1,258.73 on this investment. That comes out to a loss of a little more than 60%. With these kinds of results, you're likely wondering what my plans are for this holding and what investors I think should keep in mind going forward about MPW. Even though I'm down over $1,200 on it, remember, it's still only 0.48% of my portfolio. If this company went to zero and I lost everything, I could deduct the losses from my taxes, but it wouldn't even be enough for the $3,000 per year limit the IRS allows. So you might understand that despite MPW falling so hard, I'm not exactly in a hurry to make a decision here. Whether I keep it or sell it, it doesn't have much of an impact on me. In terms of the Steward Health situation, I found this article that was published by the Boston Globe that basically sums up what I thought would happen. Currently, 9 hospitals in the Boston area that are owned by Steward are now in danger of closing due to their financial distress from the COVID pandemic, and local officials are now, quote, racing to prevent the massive layoffs and erosion of care that could come if hospital services were to suddenly cease. I knew that something along these lines was likely to happen here. Do you really think elected officials in Boston are just going to stand by and watch as 9 hospitals in their area just shut down? Could you imagine the chaos that would ensue from something like that? I'm not saying that I believe MPW is going to collect all of their past due rent from Steward, but I do think that other forces, including local governments, are going to get involved with this. If Steward really is about to close their hospitals, then that's not going to look good for elected politicians because the closing of hospitals is going to impact every single voter out there. Ultimately, MPW's dividend at its current rate is still covered. I can't guarantee that future dividend cuts won't occur, but given the fact that it is such a small part of my portfolio, again the fact that the dividend is still covered, I really don't mind still holding on to it. If you think about it, the 30% price drop that recently occurred was a complete overreaction because Steward Health only makes up 25% of their portfolio. Therefore, if investors are going to freak out and assume that Steward Health is going to lose everything, then we shouldn't have seen a price drop greater than 25% in their share price. If you're currently a shareholder and you're wondering what to do, I would say it depends on your timeline and how willing you are to be patient. It could take Medical Properties Trust many years to recover from this, maybe even longer. I think if you have a shorter time horizon, then selling some or maybe even all of your shares would be a reasonable decision. If you don't have an interest in waiting a while, then that's another decent reason to sell out of this company. If you don't like risk at all, then I'd strongly recommend not buying MPW. For me, I'm still choosing to treat MPW as the riskiest real estate investment trust that I own, but I'm going to hold on to my shares for the time being because even if the property Steward holds are at 100% loss, which won't happen, then MPW is still significantly undervalued due to the short sellers driving the price down. If I could go back in time though, I wouldn't have bought shares of this company. Likely going forward, the only time I'll be buying more shares of this stock is when the dividends are paid out. At this point though, I'm honestly just allowing this investment to ride out and seeing what happens. But with that being said, that's going to conclude today's video. If you're interested, feel free to check out my Patreon where you'll find an Excel sheet of all of my holdings updated monthly. Plus it'll give you access to our Discord channel where we discuss higher yielding types of investments. With that being said, thank you all so much for watching today's video. If you liked what you saw, then feel free to hit that like button below and click subscribe if you want to see higher yielding investing strategy content. Again, thank you all so much for watching today's video, and until next time, take care.